Weekly trades with precision, gold, silver, and commodity setups broken down with full transparency, wins and losses included. This is the Golden Nugget with Verified Investing.
Good afternoon, everybody, and welcome to the Golden Nugget that happens every single Wednesday at 12:30 p.m. Eastern Standard Time on the legendary Verified Investing YouTube channel, the Drew Wolfer YouTube channel, the Verified Investing Twitter, the Drew Wolfer Twitter, wherever it is that you're watching from. We appreciate you so much because we would not have a platform without you. Now, I am Drew Wolfer, obviously, your golden guide to everything that's happening inside of the metals markets. Not only that, but the broader financial markets. So let's talk about everything that's happening. And the title is correct. Gold and silver seem to be back. I'm gonna have some price predictions in this video. We're gonna talk about the trade that we took on silver last week that's absolutely killing it right now. And we're gonna talk about patience, right? Because there's gonna be some stuff that you're gonna need to be in the know and apprised of. So without further ado, let's just get into it. For every single person that is here every single Wednesday, thank you so much. We appreciate you. And for all the new people that are here, right? Let's tell you what the Golden Nugget is. So first and foremost, we are going to go over what is called the commodity compass. Tells you everything that's happening inside of the metals markets and the broader financial markets, right? Then we're going to get into the second segment, which is my favorite segment, called the Golden Nugget, which is where I give you a golden nugget that comes out of my golden opportunity, okay, which is a training that I brought out that teaches people how, I have this 88, 89% win rate inside of trading, and I brought that out in conjunction with Verified Investing. We do have a special offer and kind of like a special thing that just happened that we'll tell you about here in just a little bit as well. Then we will get into our special segment. Then we will do TA on silver in the silver snapshot. We will do gauging gold, which is gold technical analysis. And then we'll do the economic calendar. And then the last thing we will do is we will tell you what questions we are answering at the end of this call. And if you have any questions that you want for next week, drop them in the comments section. Seriously, if you're out here taking trades, taking some of these trades that we're setting up, you're making money, you're doing well, you're inside of the golden opportunity, you're inside of any of these verified investing products, let us know how it's going. And maybe next week, your question or comment will be featured on the Golden Nugget. So stick around to the end and let's see if your comment is one of the ones that's featured. So without further ado, let's just get into the very first segment, and that is called the commodity compass, okay? So what's driving gold right now, and technically like what's driving the broader financial markets, okay? So according to economist Dr. James Thorpe, which he's pretty big deal, via Kitco News, an interview that he gave, he is citing one big theme, okay? And the U.S. could be entering what is called, what he's dubbing, Bretton Woods 2.0. So if you remember what Bretton Woods was, that was quite a few decades ago, where gold kind of was used to essentially get the debt taken off of the books for the United States, okay? So he's citing obviously fiscal stress, higher debt, and a potential writing up of gold's role. Now, is this going to be like a technical repricing event? Not necessarily, but you could see gold rise, okay? So he's predicting interest rates to go lower than 2.75%, citing that it is not sustainable to keep them higher than that long term. And he also predicts that gold's going to hit $5,000. $5,000 for just one of these, right? Just one. That's crazy, okay? And that's short term. Now, long term, he's predicting more like $8,000 with consolidation phases along the way, obviously, right? So the U.S. House of Representatives is also set to vote on ending the 43-day government shutdown. This is the longest shutdown in history, right? With a Senate-endorsed compromise that is expected to pass. Now, this could come with a slew of back economic data that we need to see, okay? And this could be the fresh catalysts that we need in order to see, catalysts in gold and silver to make prices go up or down, right? Equities, crypto, whatever it may be. Now, spot gold is holding above that $4,100 floor. And I say floor because I'll show it to you it's a temporary floor. I'll show it to you inside of whenever we start gauging gold in the TA section of this. Now, with an expectation of a breakout above or to the 43.82, which is that all-time high. Now, sources are noting that buy the dippers are actually stepping in at about $4,100, which is that level. And it could be a kind of like near-term line in the sand where it's like, if we stay above this, we're going up. If not, we could be going down, pretty decently, maybe even to 36.50, right? So gold mining stocks are advancing as well. And the backdrop of this is obviously softer U.S. labor data, right? High safe haven demand, central banks buying, okay? And Fed rate cut expectations. So a lot of this run up was because they think that there might be a Fed rate cut after all this economic data comes out. So let's get into segment number 2, which is called the Golden Nugget. And for this, we are going to talk about why parallels are so important, okay? And for this, we have to get into the charts. So let's go straight in and let's talk about it. All right, so let's look at gold really quick. All right, and we're going to take some of this other stuff off. Take this trend fib off. All right, now we know about this parabolic parallel. We've been talking about this bad boy for weeks. We love this parallel. We've been trading this parallel. This thing has absolutely killed it for us, and it's a big part of my 88-89% win rate, right? So let's get back down to the hourly chart, and I want to show you a couple of things, okay? So we have a obvious macro upward parallel too. So there can be parallels inside of parallels. And I know this is going to look like Inception. It's going to look crazy, right? But there can be parallels inside of parallels. And as you can see, those parallels can also be used as support when you break outside of them. So look at this parallel. It used to be resistance. Boom. Got used as support, and then broke back into it, used as resistance. Now it's being used as support, right? Secondarily, look at this macro upward parallel, right? Bang, breakout, support, 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 and then resistance, 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 came back down, used as support right here, but then broke down to the downside, used as resistance, got back into it, used as resistance up here, the top end, and support, boom, support, support, and bouncing, right? Now, the one that I really want to show you is right here, okay? This one is inside of the parabolic parallel that we're already up above, okay? Now, watch this bad boy. This thing is crazy. So this is on the 1 hour chart, okay? And if you look, we can take the parabolic parallel off. You can see we faded down. We had a nice parallel right here. Just draw it from the highs and you drag it down to the lows. It can tell you where your next support will be, or if you draw it from the lows, tell you where your next resistance may be, right? So as you can see, we kind of came up and stopped here. Little stop, boom, blasted through, support, support. Let's see if we can uphold this as support. That's why, in my opinion, a lot of times you're going to see all of these, we'll just call them, we'll call them cheat codes, right? These trend channels, they're going to be cheat codes in the markets, okay? So if you see these cheat codes, and sorry about that, I accidentally put on my second mic, so there might have been an echo there for a quick second. I accidentally hit Control-Z whenever I went back to my OBS studio. So you can see that these trend channels can technically be kind of cheat codes in the market where you can see where support and resistance is going to be based on what those parallels are actually doing, okay? So let's get into the third segment, and this is our special segment, and this is called the market mover. So what is actually happening inside the markets and what is moving the market? So we have the impact of mining company earnings and the underlying sentiments in gold stocks due to mining company earnings, okay? So gold mining stocks, they're getting a fresh boost. I think we can all see that. Anglo Gold Ashanti reported 136% year-on-year EPS surge, which is earnings per share, if you don't know what that is, and they declared a major, major dividend. This can be a sign of two different things. One being rising gold prices, right? Generating more profits and more cash flow, okay? And two, investor confidence shifting back into real tangible assets, okay? Mining stock strength often leads or confirms a change in gold's secular mood, okay? So helping to bolster an appetite for physical assets like gold and silver is what these mining stocks can do. Now, the second thing I want to talk about is we've obviously got central bank buying, okay? And this is structural safe haven demand bidding happening on gold and silver right now, okay? The fundamentals are totally different than they've ever been, Okay, so while the headline may read, rate cuts and high inflation, right? An underappreciated theme is the growing role of central banks and global fiscal stress is driving gold. And this is all happening in the background. They're doing all of this silently, right? They're not going to scream from the mountaintops, hey, we're buying, 1,000 tons of gold a year. They're not going to tell you that, right? So, for example, the US's fiscal situation is fundamentally changing gold's broader role in the world economy, and central banks are quietly accumulating, okay? Fiscal imbalance, what does that do? It increases safe haven demand for assets like gold and silver. This might make gold even more resilient, even if inflation is transitory, okay? Now, gold's support appears stronger than just a function of a weak dollar because we still see gold going up a lot of times when the dollar's going up, okay? So remember, when we print a bunch more money, that means that your gold is going to be worth more because it is going to be adjusting for inflation, right? So that's a lot of times why you'll see gold going up when they are printing money. Now, let's get into the silver snapshot. Everybody wants to know what happened with silver last week. We took a nice trade that absolutely killed it, and it is this one right here. As it sits right now, I think this thing is up like 4% or something like that. It's pretty decent trade right now. Yeah, 4.5% already. I'm not going to tell you not to take profits here, but I will tell you $53.90 is going to be your ultimate target, okay? Obviously, can you go higher than that? Yes, absolutely you could. But, this is a really good place to take profits up here, right? And we got in a little bit late. You got to wait for the confirmations, man. You got to wait for the confirmation. So did you get in here? Well, you probably would have gotten stopped out. So you want to wait for your confirmation candle. Your back test right here, you probably got in around, I don't know, $5.16 to $5.20. Boom, boom. You bounce back up. Or, you can even wait for this retest and get in at $5.40, right? So that is the one trade that hit last week that is absolutely killing it right now for us. But let's talk about what we can be doing in the interim, okay? Because obviously we know about this trend-based Fibonacci, right? This is our fixed range for this big move up right here. This is telling you this is the point of control, the value area low, and the value area high. We have now cracked that value area high, and it could act as support, okay? But I want to talk about what we can do. Well, if we come up here and we SFP these highs, which means swing failure pattern, you should probably short at least down to about right here, right? Hopefully you'll get a bear div up there, but we will see what happens. Now, secondarily, if we come up here and we hit this 2.236 Fibonacci extension, right? And we don't come all the way up here and SFP those highs and we just reject right here immediately, right? This is where you can enter a short and start targeting at the very least the $51.65 range, which is right here at the value area high of this macro range right here. And secondarily, you can start targeting the 2.0, which is at about $50, okay? Now, what's your next short? Well, you've got your $49 range to the 2.0 Fibonacci level. If you lose that level and you lose this naked VWAP right here, and what is a naked VWAP? Well, it's where VWAP resets, but it has not come back and back tested that, okay? So whenever you've got a VWAP down here like this, if you lose that level and then you bearishly back test it, this is where you got to start thinking about some shorts and potentially writing it down first and foremost to the point of control around $48.26. Secondarily, you can take it even further, potentially down to $46.58. Now, secondarily, you start getting down here, this is where you got to start thinking about some longer term shorts, right? You lose the 0.786, you hit that value area low, you lose those, that's where you got to start thinking about some shorts here, down to at least the 1.618 Fibonacci. You lose the 1.618, I think we all know the deal, you're definitely shorting down there, and if you lose that point of control on a micro basis, or a more macro basis, sorry, and that 1.5 Fibonacci, you will be shorting as well. Now, you can just take this trade all over again, right? If we come back down here and we bounce from the 2.0 at about $50 and we hit this naked VWAP right here at about $49.66 to about $50, that's a nice little longing opportunity. You've got your obvious long opportunity if you can come up here, smash this high, no swing failure pattern up here, back test this, and then boom, you're blasting off, obviously to the upside. Secondarily, you come back down here. This is the trade that we were just talking about, just taking this trade all over again, right? And then third, we have this long at the 1.786 fib. especially if you come down here and you bounce from the value area low, okay? Secondarily, if you bounce from the 1.618 and then if you bounce from the 1.5. Those are your trades as it sits right now on silver. So let's go ahead and gauge gold. Now, with gold, it's pretty simple. I mean, it's pretty simple. And I'll kind of go over the technicals on this really quick. Let me get over here to the gold futures chart. And I just want to show you something. So as it sits right now, we are in what's called an AMD model, accumulation, manipulation, distribution, right? We're above the parallel, we're using it as support, and we are in an uptrend on the hourly chart. We're trying to break up for an uptrend on the 4-hour chart, which would be at about 41.73, and then that would align almost all trends except for the 12-hour chart, okay? Now, the one thing I want you to understand is this is what your market structure looks like. You are really bullish above about $3,900, okay? So keep that in mind, $3,900 bucks, okay? Now, what can we do? Because we didn't get any trades last week, unfortunately, because gold just ripped. It just ripped. It didn't come back and retest any of our levels. It just went up. So we have a naked VWAP here again, right? And then we have the upward portion of that trend channel, okay? So let's see what we can do, see if we can get a trade there. Secondarily, if we come back and backtest that, obviously that's where we're longing, right? Secondarily, if we, now that we've reclaimed this parallel, if we come all the way back down here and backtest this 2.618, you gotta start thinking about longs here, man. This is a great area. Anywhere in between about the 4,100 to about $4,010 range on spot gold is such a good area to start thinking about longs. Then you've got your obvious ones down here, which is going to be your value area low, right? And your 2.236 fib at about 36.59. I don't think we're getting down there anytime soon. Maybe with fresh catalyst, but if, you know, economic data doesn't come out and push it down, I don't think we're getting down there. I think we're going to start trending up again, especially if we take out these old highs. Secondarily, you've got this right here. And if you swing fail those all-time highs with a bearish divergence, you are looking to short. Secondarily, we've got the shorts down here. If you swing fail these old highs, which as it sits right now, we did not swing fail this high, right? We just blasted through it. So let's see if we swing fail this high and this high. And if you do, that's where you can start thinking about shorts, bringing it right back down to this 2.618, and then obviously waiting for your long, right? And the last short is going to be if you actually come down here and you lose this, you bearishly backtest it, you got to start thinking about some shorts. And after that, that is when we can start talking about the levels under that, if we somehow get under those levels, right? Now, let's talk about the economic calendar. Then we'll answer a couple of questions, then we'll let you get off of here, right? So I'm trying to make these a little bit faster. On Friday, we have retail. Well, let's do Thursday first because Thursday is actually going to matter a lot. Tomorrow, CPI, initial jobless claims. You know why this matters? That is economic data, it is inflation data, and it is telling you how strong the jobs market is. Okay, this is initial jobless claims. Okay, they can revise this, remember that. Now, retail sales and PPI, producer price index, which is inflation data, and retail sales, which tells you how strong our buying market is, right? That is on Friday. Then Monday, we have the Empire State Manufacturing, and then on Tuesday, we have the Import Index as well. Now, on Wednesday, we will have a lot. We have the Fed meeting minutes, okay, that's first and foremost. We have the Philly Fed Manufacturing Survey, and we have the existing home sales and other housing data. Now, the Philly Fed Manufacturing Survey is going to be key, and that existing home sales and other housing data is going to be key as well. Now, understand that that data might be skewed a little bit from the New York sales that are happening right now after Mondari, I believe, was elected. There was a big bump in housing market sales or offers at least. So we'll see if that has any type of an effect, okay, from the elections. Now, let's answer some questions. I want to answer a comment first because I think it's funny, and I love the fact that people will come in here and banter with me, and that means people are more comfortable and everybody's having a good time, right? We're making money, everybody's having a good time, we have a high win rate, and you know, the one thing actually I do want to go back really quick, and I want to tell people, sometimes it is frustrating that you're not getting some trades, but we actually just did come out with something that's going to help you with that, okay? So I could have given you this inverted head and shoulders, but guess when this happened? This happened on Monday, and I don't see you until Wednesday, and we would have absolutely killed it. This is a perfect trade, perfect entry, perfect setup, perfect exit, no drawdown, no nothing, just absolutely killed it. And you would have had a better entry than the entry that I gave you last week. You would already be up almost 7%, right? So you're probably wondering, okay, Drew, what's the fix to that? Well, we have brought me into smart money commodities. So if you want all of my trades, like literal daily access to me saying, hey, here's what I'm trading, here's why I'm trading it, here's my levels multiple times a week, get into smart money commodities. Seriously, I do silver, I do gold, I do Brent crude, I do WTI crude, I do natural gas, right? I do all of these different ones, and I give you the trade alerts inside of there. That way you don't have to try to decipher it from a YouTube video. So there's that, right? So I would encourage anybody that is taking these trades, but wants more trades, wants more action, wants more education, because we also teach you a lot more in there as well, because we're in there more than once a week. Get into smart money commodities. It should be the first link in the description. I literally just started this on Monday. Now, let's address the comments, all right? So this one says, the hair is distracting. And I get it. I totally get it, man, but I can't cut it. This is, if you cut the hair, you lose the win rate. So you can either have the Dutch braids, the Viking braids with an 89% win rate, or we can cut it off. I could go bald, or I can get a hard part or something like that, like I had back in the day, like when I was like 25, and we can have a 40% win rate. You decide. Right? All right. Now, can you review and discuss GLD, please? So I will. I'm not going to do TA on it because that would take too much time, and we trade futures, okay? So there's a benefit to trading futures too, and if you want to know what those benefits are, get into Smart Money Commodities where we show you all of those things. Now, GLD, it is a gold ETF. It should mirror the moves of gold. So if gold is going up, say 4 or 5%, a lot of times what you're going to see is GLD going up 3 to 4% in the same time frame. So measure the moves on gold, take my trades and say, okay, Drew's measuring out a 5% potential upside move here, and then just cut that by maybe 20% of the aggregate and say, since he's measuring out 5%, I'll shoot for 4% on GLD if I get the confirmations on this, right? Now, obviously you have to do your technical analysis, see if the charts line up with my analysis. Don't just go in on it based on that, but you see where I'm going with it. Now, somebody asked, are we going to 3650 first or 4300 first? And in my honest opinion, we're going to 4300 first. The only thing that's going to stop us from going to 4300 first is if we get a slew of economic data that's like, oh, bullish market for everything else, right? Meaning labor markets are doing well, inflation is slowing, you know, there's no Fed interest rate decisions that are going to be cut, you know, in December and stuff like that. That could get us to 3650 first, but I think the path of least resistance is up to 4300 first. Now, did I mention a bottom for silver? No, I did not, but I can give you a bottom for silver if you'd like. Let's get into the charts. So right over here, bam, let's go to the silver chart and boom. Okay, where is my trend-based FRVP? Want to kind of show you what we could be looking at. So first and foremost, I really don't see silver probably going under, I would say, man, I don't really see it going under 40 bucks, to be honest with you, but let's get the fibs up. Let's get the fibs up and we'll show you. Bang, right there. 36 bucks. I mean, that is your absolute floor on silver right here, in my opinion. That is your absolute floor. I don't see you going much under that, but if I show you another fib, it might give you a better kind of understanding of what this could look like, right? So you've got your July fib, right? $43 is your real, like super good golden pocket retrace, but 40 bucks is going to be your floor. I mean, are you really going to get under this 0.786 fib? Probably not. You can look here as well and see if that lines up. And as you can see, the 0.5 equilibrium price on this larger fib lines up, as you can see, $40.65. It lines up with the 0.786. I really don't see us going under $40. And to be honest with you, I really don't see us going much under probably 45 bucks anytime soon. We've got a lot of bullish momentum going up. And when you look at these trend fibs, man, I mean, that $40 to $42 range is a good buy opportunity long-term, at least in my opinion. So, yeah. Hopefully that helps you. So with that being said, I appreciate everybody so much for showing up. If you have anything, drop it in the comments section. Seriously, maybe next week I will address your comment. Maybe I'll answer your question. Maybe you can make a joke about me and we can all laugh together. I will see you all soon. Everybody have a wonderful day. Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.